Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you already haven't, and just a little disclaimer nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. You can read more on the disclaimer below. Let's get into this weekend stuff. A lot of stuff happening. And, well, not too much stuff, but there was a lot of stuff I wanted to get into. And I figured I might as well get in. First, I always do this on the weekend, the fear and greed index for gold. If you look at it, gold should correct a little bit more. There is greed in the market. It's at 67. I don't know what is it made of. Website followers, free gold, and so they have some sort of code here, but love to know what they says. Obviously, measures driving the market. But yeah, right now looks like there is greed, but it's not so it should be a I'm gonna look in to see what this is, but there is a little bit of greed, but I said, right now if you look at gold 3,300, silver 38. A lot of people are talking about a correction going to 2,900 or GLD at I think 275. I think it's correcting more in terms of time. I think it's getting ready for one more upswing. And who knows where it's going to be, but I'm very, I'm bullish. I think it's sideways to down for now. But a year or two from now, in my opinion, not investment advice or whatnot, I think it will be higher. Gold, and when I talk about gold, I mean silver too. And I haven't talked about my next target is I think silver's going to 50. And then if it breaks, we'll see how it goes. Just remember, parabolic, when things are going up drastically, that's generally the sign of a top. So look at platinum, 1447. So anyway, the stock market, fear and greed, CNN, that's at sort of last week. It's at, of course, some ad. I don't really care about State Farm. Still at 75. This is extreme greed. So I think there will be some sort of greed. The cool thing about ChatGPT is look at this. It tells you the technicals now. If you actually look at it, it's actually pretty cool. We'll go see what the technicals say on gold and silver. Uh, what? Of course. What are the technicals? We'll say the stock market. For the stock market. Let's see what it says. So, what are the technicals? We're just going to go down to the bottom line so you can see it says all this stuff. So, a lot of these valuations, medium to long term is they say it's bullish, and short term caution is advised. That's what AI is saying about the stock market. I actually think it's the opposite. I think it's short term more. Uh, Except potential sideways, modest pullback according to AI, near term, medium. Golden cross buying moving averages and MACD support continuation. Macro factors are stable. Next higher to 645 is likely. Bullish medium to long term outlet. Short term pause or slowdown. So that's what they say. I think this year is the last year of any upswing. And that's the thing about technicals. They tell you where the trend is, but they don't tell you when it's going to change. So let's see about gold. Let's see what they are saying about the technicals of gold bullion. So right there, they're doing the GLD, future, see the RSI, all this other stuff. Drivers behind, trends. mostly bullish. RSI is neutral. MACD is positive. Support 2500. Resistance. I don't know what they're saying. Medium to long term technical structures remain bullish, supported by positive moving averages. Momentum is cooling. Gold technicals favor continued business. Watch for short-term consolidation. Now, I am sort of, I wouldn't say bullish long-term, more bullish medium-term. I think there's one more big upswing, but then I think it's going to go to a multi-year bear market after that, and gold will go down to 2000 probably, or 2000 to 1500 somewhere. And then that will be your next buying opportunity. This next upswing will be a selling. I don't know when it's going to end. It could end, this upswing could end 2 to 3 years from now. We could be in 2009 right now. So we'll see. Let's get into the data. Right now, the recession talk. This is the thing. This is what the elites sort of look at. They actually believe this government data because a lot of them are in bubbles, ironically. People and a lot of foreigners who are in the stock market, they believe this data too. So housing permits, that's better than expected. Housing starts. Michigan consumer sentiment up by a little. So as you can tell, right now, there's no really bad data to talk recession yet, but underneath the hood is another thing. Look at this. I talked about the decline in tourism, and that's going to continue. It's going to continue for years. This isn't like foreigners, not tourism coming to America. That's not like a one-off thing and just happening with Trump. It's going to be a trend for the next 10 years probably. So look at this. Las Vegas casino dealers quietly being laid off amid decline in tourism. And a lot of it's from Canada, foreigners, and I would say combo with bad economy. Look at this. Casino floors getting quieter. Downturn in tourism. Major resorts from the Strip, including Fontainebleau, Resorts World, have started laying off workers, many which are dealers, and foot traffic dwindles on the gaming floor. So look at this. A lot of those people playing cards, the blackjack dealers. Look at this. With fewer guests coming to town, new data from Las Vegas Convention Visitors Authority shows that the city's visitors volume dipped 7.8% year over year March 2025. So 7.8%, third straight month tourism is dipped. Fewer guests coming to town. Gaming revenue on the Strip fell 4.8%. Hotel occupancy slid to 82.9%, down from 85%. And despite overall visitors, convention attendance is up 10%. That shows that corporate America is still okay because of asset price decline, but that's going to be coming next. Tourism throughout the city appears to be in steep decline as international arrivals are down sharply. So there it is, international travel. So talk about automation, but yeah, you can see Sin City, Las Vegas, and that's going to affect their housing market, and that's why their housing market's declining. We talked about that here, where the Sun Belt, the South, it's starting to come in the Midwest now, and it's going to go to the Northeast and the high-end areas. And if you haven't heard any of this stuff I just told you, then you should subscribe because I cover it, but other people. Let's go to the next one. Everyone says it's a bifurcated economy. The rich aren't feeling it. Well, look at this. National fashion retailer files Chapter 11 bankruptcy. So now that's just a restructuring, but this is more of a high-end retailer. So Anne Fontaine U.S. affiliate Paris Boutique filed for Chapter 11 bankruptcy, unable to recover from the COVID pandemic. So they had to cover. So the business is so bad. And look at this. Conditions are even worse for luxury apparel chain Ted Baker Canada, which operates 31 stores in the US, 9 in Canada, 8 Brooks Brothers in Canada, 7. So, yeah, things are worse for the luxury. So high-end specialty appealer, parent company high-end retail chain Karma and Luck operates Las Vegas, Los Angeles, Houston, Florida, New York. They filed for bankruptcy. So as you can see, it's not just, these are the high-end retailers. This is not your poor McDonald's customer that everyone is talking about where the sales. Remember what I said? I don't want to say trickle up poverty because that was like some talk show host, but you're only as strong as your weakest link. If the poor start really, their economic situation starts really taking a hit, if the middle class, it's going to hit the rich. You're only as strong as your weakest link, and now it's starting to hit to the affluent consumer. And Federal Reserve, look at this. This isn't just me. Everyone talks about crazy conspiracy theorists, but this isn't just me. This isn't Zero Hedge. Federal Reserve says consumer distress is at a 12-year high and credit cards are the canary in the coal mine. So there it is. The Federal Reserve is talking about Federal Reserve Bank of Philadelphia raising the alarm about another economic indicator, credit card payments. According to the central bank, more than 1 in 10 Americans paid their monthly minimum. So only 1 in 10 Americans are paying their monthly minimum on their credit card. So often, I love this, often making minimum payments is a sign of consumer distress, and this is at 12-year high. It's like, yeah, no, Sherlock. Like, yeah, thanks, Sherlock. I didn't know only making the minimum payment and not paying off your credit card debt could be a sign of distress. They really act like you're dumb. So why are Americans in debt? Because most of the jobs stink and inflation's high. Like, I don't really need to read that. And to show how bad the credit cards is, American Express shares drop as earnings beat record revenue. So, they put their spin on this, but if you actually dig deep, American Express, they did have record number, and this is affluent card members. Remember, American Express, that's the rich. But look at this. Net income declined. So that means their expenses are going up. Their expenses are going up. So even though revenue's up, expenses are up. And there was one other thing. Look at this. Offering the high earners. So let's see, there's one other thing. Look at this. Now remember, this is high earners. Amex said its provision for credit card losses increased 11% from last year to set aside more reserves and record net write-offs. So now they do say it ticked down to 2% from 2.1%, but provisions for credit losses are increasing. And they even said the economic outlook is less supportive than the one we had at the end of the first quarter. So you can see net income is declining even though they have record revenue because their expenses are going up because they're losing money due to high-end earners not being able to pay. And that's the other thing I said. The video is not there, but auto loan negative equity surges. So creating now I have positive equity in my car because I don't have a loan for it. I paid it all. But yeah, here it is. Auto loan negative equity is really going down. And I wanted to do this. Look at this. 5 days ago, this was MSN. Not auto loan negative surges. They had some cool stats, but I didn't really get to watch it. But if you look at it, sorry, video is not available. So, and on the jobs front, Coca-Cola shuts down 5 U.S. plants, mass layoffs confirmed by summer's end. So, I feel bad for the workers. 5 factories, 900 jobs. Outsourcing, yeah, great. Emerging, whatever that means. American Canyon plant closed. Ripple effects, yeah, it's gonna help hurt the local communities because those people that had jobs, they were also customers somewhere. Displaced workers. So yeah. So anyway, and this is why Waller makes the strongest call for a rate cut. This is why they want to cut rates, is because the economy's collapsing. The Dow was down 140. I don't think there'll be any market crash this year, this calendar year. Next year, you never know. When I think about the stock market, I mean Bitcoin, it's the same thing. Bitcoin is just a levered play on the stock market. I think gold's in correction mode because, as I said, I showed you the data and I showed you what was really going on. And a lot of the money looks in it. Now, all this is going to start showing up, as you can see. I think some of this was a fluke because you saw a couple weeks ago the data was bad. So, anyway, we'll see what happens this week. My opinion about gold is silver's going to 50. Gold could be anywhere from 39 to 4,000 to 4,500 or 38 or 30. I don't know how gold's going to play with that. I just know the next measurable target with resistance is, I think silver will break 50 and do a really big vertical move, and that will probably be it, in my opinion. But we'll see what happens. Just remember, none of this is construed as financial investment advice, just my opinion. More on the disclaimers below. I'll see y'all next video.